Hello, 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 and thank you so much for joining our virtual home buyer workshop. We are so elated that you are here, that you've decided that now is a time that you want to become a homeowner. Now is the time that you want to own easy. And so, regardless of who shared this information with you, once you're ready, we want you to get back with that person and let them know, hey, I want to go from renting to owning. I want to position myself to leave a lasting legacy through home ownership. My name is Michelle W. Kofer, and I'm one of the founding members with this amazing platform, Own Easy, where our commitment is to educate and empower, but more importantly, position families to be homeowners. We have a special project that we're working on called 75 for All, and you're probably seeing this as a part of that initiative. Our goal 75% home ownership for all Americans. And when we start looking at the data, unfortunately, African Americans own homes at a rate of about 44%. 48% for Hispanic Americans. And so we know that there's a lot to do to get people mortgage ready. But myself, my colleagues, and the person that shared this with you, we're all committed to ensure that you can own easy. So I'm going to go ahead and share my screen. And we're going to start this presentation with talking about the power of going from renting to owning. Okay. The power of going from renting to owning. So give me one moment to make sure I got the presentation up, and we're going to go ahead and get started. So we want to again welcome you to Own Easy. Welcome to our home buyer workshop. We're so elated to be here because our anticipation is to help you get the keys. We have a mission of helping 1 million families over the next 5 years through 75 for All, our nationwide movement. And so we are planting community loan officers in every single neighborhood to make sure that you, your friends, your colleagues can have access to affordable housing resources so that you can get into the home of your dreams. We're especially looking at how can we improve the home ownership rate in minority communities so that we can strengthen, wealth opportunities and close the wealth gap for all Americans. And so over the next 90 days, we're committed to helping 900 families become homeowners. So, yep, we'll open the doors and we're going to do it by changing the narrative. When you think about 2022, that wasn't that long ago. White Americans made up 88% of all of the home purchases, followed by, 3% for blacks and 8% for Hispanic Americans. So we know that we've got to do something to shift that data because the home ownership rate today, as you see on the left, is wider now than it was during the civil rights era. So there's a lot of work for us to do. Even when you think about, the fact that most African American renters, more than half of their monthly income is going to rent. Guys, you got to go from renting to owning. There's no power in renting. Are you able to pay a mortgage? Yes, because you're paying one every month. It's just not yours. And so we want to show you how, regardless of what race you are, you can get educated. You don't have to worry about being turned down for a loan because of the color of your skin, because we're going to put you in position. So today, we're going to teach you about going from renting to owning, the power in that, financial literacy, and the mindset that comes with home ownership. We're going to talk about the 5 steps to home buying, and then the loans and financing options that are available right with the person who shared this link with you. So when we think about going from renting to owning, let's just assess, renting does have benefits. And most of them, however, are temporary. Home ownership is going to give you permanent advantages. And so, regardless of your financial situation today, regardless of your credit score, no matter what you don't know, we are committed to help you become a homeowner. Guys, I grew up in the projects, and I remember at age 26 just thinking like, I'm paying this lady's rent. I mean, paying her mortgage every month. Why don't I get my own home? Why am I renting? So I bought my first house at age 26. And I realized about 6 years later, when I got ready to sell it, that there was wealth in real estate. Hashtag that, wealth in real estate. So I learned that, hey, I bought this house, but I can make more money now that I'm selling the house that I did when I bought the house. And so I used the income from that first home to go and purchase my second home, which then ultimately I was able to sell. And then I moved to Atlanta. Life happened. My credit score went backwards, but then I rebounded and I was able to now purchase my third home. So I'm talking to you as a 3-time home buyer. Same little girl, grew up in the projects, no compass around home ownership, no education, but I just knew that I deserved more. And I want you to know today that you deserve more than renting. And even though people rent, here's why: it's flexible. especially, if you can get a short-term lease, maybe you're planning to only be in a city for a short period of time. Yep, you can relocate when you get ready to. When you rent, it requires typically less upfront money, but also know right now, guys, that you still could come to a rental apartment or a home and have to pay 3 to 4 months security. So it's not like you just get to go in and rent. And for renting, you have to have a better credit score. Did you know that? You have to have a better credit score to rent than you do to actually own. And so another benefit, people like to say, well, I don't have any maintenance costs. I don't have to worry about a water heater, and I don't have to worry about lawn maintenance and all of those things. Well, guess what? The landlord have already taken care of replacement costs. That's why your rent is so high, right? So you're paying for maintenance costs if you're renting. You don't think it, but you are. So truly, truly, the real reasons why people aren't renting, I don't care what they say, the real reasons, and data backs it up, is that people have credit challenges, they don't have cash flow, or they're just not educated around the home buyer process. The average credit score in America today for African Americans is a 677. So we're lagging far behind, considering that the average credit score for our counterparts is a 716. That gives you buying power. That gives you a better interest rate. African Americans and Hispanics are about 15% credit invisible, meaning they don't even have a credit score. So those are the real reasons that's stopping people from buying. Number two, people don't have cash flow. So when it comes to buying a house, you need to have a good debt to income ratio, but 60% of all Americans don't even have $500 in their savings account. Again, that is a true reason why people aren't owning a home. But today, we're going to give you everything you need and need to know to break into home ownership. And then lastly, lack of financial literacy. And this is costing Americans over $436 billion just because we're not educated about interest rates. We're not educated about principal balances. We're not educated about debts and creating budgets and how our credit score really does matter. Guys, if you've been telling yourself your credit score doesn't matter, stop. You're lying to yourself. You want to make sure you address those things. So why should you own a home? You should own a home because there's a sense of accomplishment. There's this internal pride of knowing it's mine. It's something I can leave behind. But also there's money in home ownership. Somebody say there is wealth in real estate. Listen, there's equity, appreciation, and tax deductions. So equity is when you leverage your income that's built up in that home to pay off your debts, to do repairs or whatever. So appreciation is when you decide to sell that house or maybe rent it, but you can do so at greater profits. This ultimately will increase your net worth. So there's money there. And then tax deductions, because if you're renting, there's no tax shelter for you. But if you have a home that you own, you got mortgage, interest, principal, and property taxes that you actually can go in there now, and you can reduce your taxable load, right? There's stability and security. So no worries if you're in a home, nobody can come in and say, hey, the building is shutting down. There's no worry of being evicted, no worry of the rent increasing next year. And then of course, having a mortgage, you stabilize your credit because that mortgage reports every single month on time. When you're renting, there's no reporting of that now, unless you pay for a service. And so whoever invited you here, if you are renting, they can help boost your credit score by putting you in our rent reporting service, which is amazing. But if you were owning a home, it would automatically go to the credit bureau every single month, and there's no cost for that. Now think about it. You missed that rent payment, they evict you. That thing is going to your credit. So with owning a home, you stabilize your credit. When renting, you could compromise your credit. And then also having a home is legacy. Imagine having something that you can leave on for generations, and that can be entrusted to your estate. So the true cost of renting, guys, if you live in a major city and let's just say average rent is $2,000, you're talking about after 1 year, you spent over $24,000 just to live in that place. But God forbid you like the school system there, your kids are in sports, your job is nearby, and you live there for 5 years. That's $120,000. I want you to think about this, because when you pay your rent every month, it doesn't seem like it's a big expense until you start compounding it. 10 years, $240,000, 15 years, $360,000 that you will never, ever get back. And so we admonish you today to own easy. 100% of your rent is principal. 100%. 100%. So you don't get anything back. You don't get, I'm sorry, 100% is interest is what I meant to say. You don't get any of that back. It's not coming back to you. So go from renting to owning, guys. Go from ownership, because that's where you get to build equity. Renting doesn't give you that. Your first investment is you. Your second investment is the home you purchase for you, right? And so start realizing today that it doesn't matter if you aren't sure about job security, let's help you with that. You wondered about your debt load, we can help you with that. When you rent, you don't have the ability to choose, like, oh, I can paint my walls, or I can customize my front door. You can't do that when you're renting, but when you own, you can. And then there's long-term benefits and financial gain associated with ownership. Like I said, my first house, I was able to sell to a cash buyer. My second house, I was able to walk away with comma checks and literally start my life over in a new city. So I want you to realize that today, the real estate market, it can be up, it can be down. Either way, it's always better to own than to rent. So you want to create your rent to own plan right now. The person that referred you to this video can help you with that. You've got to understand that in today's economy, rent prices are equivalent, if not higher, than they are for a mortgage. So if you're paying $1,600 for a one bedroom apartment, you can own a 2 to 3 bedroom house, even if it meant just driving 10 miles outside of the city. If you're paying $2,400 to rent a 3 bedroom house, you could own a 3 bedroom house for less than that. Give you a true story, guys. We were living in the same county, just the city right across 316 here in Georgia. We were living in Bethlehem, spending it $2,000 a month to rent a 3 bedroom house. We own now a 4 bedroom home, and our mortgage is only 1508. So we save over $500 a month to have our own home. We couldn't give that rental property to our daughter. We couldn't give it away, and it was only 3 bedrooms. And we're spending $2,000 a month. So I want you to understand that the time to buy is now. Hashtag now. So there's a mindset associated with building wealth. There's a mindset associated with building wealth in the world of real estate. And unfortunately, so many of us have just miseducated. First of all, you got to want to be a homeowner. You have to desire it. Ask yourself, what do I believe? Like, am I capable of owning a home? Some people don't even think they deserve to own a home. Why do you want to own a home? Is this a legacy home? Is it going to be one day turn into a short-term rental, an Airbnb? Do you want to rent it out one day? Is this a place for the family to come together? Why do you even want to be a homeowner? And then also, guys, you got to be willing to be patient, and you got to be willing to persist through the homeowner process. I have bought 3 homes, and I'll tell you, it was hard, hard every single time. It was always something that you thought should have happened that didn't. It was something that was supposed to happen that didn't. So you got to decide right now, I'm on this journey to own easy. The person that referred me to watch this is concerned enough about me, and I'm going to do this. We're going to do this. Ask yourself this question: where did you learn about finances? Who taught you about ownership? Where did you learn about money? Because for most of us, it wasn't from, our parents. It wasn't about, learning in school or in college. And what we did learn from our parents, we probably learned the wrong thing. My mom taught me to rent. My mom rented all her life, including the microwave, including the washing machine and dryer, including, the TVs. We rented everything. So I learned early to rent. And I learned that money didn't grow on trees, and that, certain things for other people that lived on the other sides of the track. But today I want to challenge you to unlearn those things. Did your family discuss home ownership? Probably not, because most of us that grew up in minority families just didn't grow up with homeowners around us. My grandma lived in the same house all my life, and I didn't know it wasn't her house until she died, and we had to take her things out. I had no idea. She lived in the same house. My big mama lived in the same house all of my childhood. But when they died, they had to get out. The stuff had to come out. Guys, you deserve home ownership. So I want you to focus on the mindset that you need. You need to believe that God is equipping you to have everything you desire, that it includes a home for you. It includes a backyard for your kids. That sometimes, yes, you're going to have to invest time and money to get what you want. Sometimes you're going to have to pay for credit repair. Sometimes you're going to have to pay for having a financial coach. That it's just what it is. If you want the goal, right? Then you got to get exposed. One of the things that I do, I take my daughter all the time to look at homes. Now, we're living in our 3rd home, but this isn't our dream home. I have way bigger dreams than this. But I can tell you right now, so many people don't dream about home ownership because they've never taken a stroll through their desired neighborhood. Get out, guys. Ride through subdivisions that are being built in your city. Exposure changes everything. I grew up in the projects, my mom, single family mom, but I was so glad that I had friends whose parents had taken advantage of owning their own home. And I would look forward to being able to go to their house because it gave me the opportunity to dream, right? Get financially literate, read, study, go online, attend virtual workshops and in-person workshops like this so that you can break out of that cycle. And so when it comes to financial literacy, you got to learn the basics: budgeting, saving, how to grow your money, how to invest your money. Make it fun, make it a family activity. I love saving coins with my daughter. In fact, we have a jar. We save. If you can see this, we save, and once it's filled, we take it to Publix. She doesn't get to spend all that money. Some of that money has to go now into an interest earning account. But guys, we're talking about creating opportunities that weren't created for us. Learn basic real estate terminology, home ownership terminology. Read books, take online classes. Just seek the guidance of professionals in your life who will help you build up that knowledge base. All right. So ultimately, guys, I want you to set a goal today. When are you going to be a homeowner? Is it the next 3 months? Is it the next 6 months? Is it the next 12 months? No more than that. Set a goal, because regardless of whether you believe it or not, you can be mortgage ready in as little as 3 to 6 months working with our program. So define your financial goals and objectives. What am I trying to do, by when, and why? Determine how much house you truly can afford. Listen, you don't have to go buy your dream house the first go round. I'm in my third house. This is not my dream house, and I'm okay with that. In fact, I'll tell you a true story. When we purchased this house, we had gone through racial discrimination with a lender, and had to go back into renting. So I wasn't happy about that. But we didn't have time to like just buy a house because my daughter was getting ready to start school. And so we ended up going back to renting. And this neighborhood we live in now, actually, I had looked at before, and we ended up spending 10,000, not 10,000, but $100,000 more on this home than we would have had we just picked this subdivision the first time. But anywho, we got into the subdivision, and I had looked at all of the floor plans at the first time, and I was going to get the larger floor plan. But of course, a year later, when we finally did come into this community after the whole fiasco with our racist loan officer, I decided, you know what? I'm not getting the biggest floor plan. And I began to think about the economy, right? So we bought this house in 2020, and I began to think about, what if I lost income? What if my husband lost income? What if there was an economic downturn? And instead of deciding to get the biggest house, we got the second smallest. So there's one house floor plan that's smaller than this one, and it's a ranch. So we got a 2-story, but we got the smallest 2-story in our community. Do I care about that? Absolutely not. Should you care if your house is the biggest or the smallest in your neighborhood? No, because some of the people with the biggest, listen, I'm telling you a true story right here. Some of the people with the biggest mortgages are the ones with the things coming in the mail that says late, past due. Ask me how I know. We've all gotten mail that didn't belong to us, and you know what a mortgage envelope looks like. I've gotten mail accidentally from my neighbor across the street and my neighbor beside us, and unfortunately, they're behind on their mortgage. So you got to decide, what can you afford? It's not about the Joneses. If you're renting right now and you're in a 3-bedroom, get your kids out of there. Even if you bought a 2-bedroom townhouse, at least is yours. You're building equity, and you can leverage that equity, and next year or in 2 years go out and buy the house of your dreams. So assess your needs versus want. It's not about what you want for your first house. It's about what you need. You need to stop paying somebody else's mortgage. You need to own easy. You need to give your kids something that can be their own, even if it meant there were twin beds in one room right now. Assess that. Right. And also create a saving strategy. As I said, most people are not ready to buy a house because they don't have any extra money. They don't have even down payment. So what can you do? Eat out less, limit your travel, choose not to do expensive extracurricular. You don't have to take that dream vacation this year. Oh, it's your 40th birthday. So what? You don't have to go to Dubai this year to buy your house. Yeah. Forget Dubai. Dubai is not paying your legacy, guys. Don't fall into the temptations of social media. Do what you need to do to eliminate unnecessary expenses in your life. And if that includes picking up a side gig, do that. I highly suggest that you ask the person to share this with you. They're a mortgage loan officer. They do this part-time. I do this part-time. So add additional income, guys. We're looking for more people to be community loan officers. So if you know people that want to buy a house, including yourself, you can be a community advocate, and you can get paid to help people own homes, to do workshops for people just like this. So let's talk about your credit. Let's, number one, just address the elephant in the room. If you got bad credit, you got to fix that. It is what it is. A good credit score, a good clean history is going to give you the best financing terms. You can get your credit report for free at annualcreditreport.com. But guys, you got to pay your bills on time. That's 35% of your score. You can't be late. You can't borrow somebody's money and decide you're just going to pay it back when you want to pay it back. You got to pay your bills on time. You got to work on reducing your debt load. One of the easiest way to reduce debt is to get more income coming in, a side gig. Keep your credit utilization under 30%. Under 10% is the best. That means if you have credit cards, multiply by 0.3, that's the most you can use ever. Multiply by 0.10, that's going to be the best way to boost your score. Don't add any new trade lines, no car notes, no anything, no cosign for anybody when you're looking to become a homeowner. And definitely do not close out accounts. Even if you're tempted to pay down the debt, that's amazing, but don't close the account because you lose the credit history and that will impact your credit score negatively. All right. Now, if you're not sure what to do with credit, guys, work with a professional. You go to a dentist to get your teeth pulled, you go to a hairstylist to get your hair done, a makeup artist to get your makeup done for a photo shoot. Guess what? We are also professionals. So work with a professional is going to be the most expedient legal manner to get your credit done. In fact, we have AI technology, guys. It's patented. It's the best of the best. We're talking about being able to help you with your credit score and giving you the greatest likelihood to get these negative items off. And if you don't have any positive credit, you need to add trade lines, and we can assist you with either reporting your rent or getting you in a secured card to help boost your credit score. But either way, we can help you. So if you need help with your credit, the person that referred you here can help you. We have an amazing legal plan that not only has the AI driven technology, guys, but we also have credit attorneys who are able to leverage your consumer rights. Some of our clients get compensation. Some of them are able to, go into litigation, and people have been able to get 1,500, 2,000, 3,000, 4,000, all the way up to $8,000 back. That's money you can use on down payment, pay down debts, earnest money. So you need to fix your credit. We do have a program. It's only $89 a month. It's $149.90 to start, but that includes your assessment, your startup fee, and then it's $89 a month after that, $3 a day. And so if you're serious about being a homeowner, that is a super smart investment. We also have positive trade lines because, guys, you need installment loans, you need revolving loans, and you need to have actually accounts that are open. So we have access to Rental Karma, where we can help you report your rent. We got a credit building tool where now this, will allow you to have revolving trade lines that are yours. You don't have to worry about spending $4,000 or $5,000 for a seasoned trade line, if you will, when you already have things that can be reported. So let's talk about the 5 steps to purchasing your new home. It's easy, easy, easy. Somebody hashtag own easy. 5 simple steps to purchasing your home, understanding that you're getting ready to make a really big expense. Like home ownership is probably going to be the greatest expense most people ever spend in their life. So just know that it goes beyond saving up for a down payment. Once you buy a house, you want to pay your mortgage on time. You got to make sure that you're paying the lender. And also think about it. I know that there are going to be home repairs and maintenance costs. I might have HOA, home association, homeowners insurance, property taxes, and things like that. You want to prepare for that. Number 2, you want to get organized now. Get organized before you start looking for a house. Do I have the credit score to qualify me? Is that going to get me the best interest rate? Do I have a budget that I'm keeping track of how much I'm spending, how much I'm earning, how much I'm saving? And listen, I'm not a big fan on saving up just to be saving. I am a fan for saving for a goal, right? Saving for home ownership. So save for upfront costs that could be associated with home ownership. If you have to auto pay your savings, if you have to, set a certain amount of money to come from your payroll to automatically go to your account, this is money you can use for down payment and any upfront costs. And then what you want to start doing right now, guys, is gathering up your documents. Listen, get you a manila folder and go ahead, get you a little manila folder just like this, and go ahead now and start putting away the documents you're going to need to rent to own. So we're going to need a month, your last 30 days of check stubs, 2 months of bank statements. We're going to need 2 years of tax returns, proof of any income, all income, supplemental income. You got a side hustle, all of that, your license and your social security card. That's it. That's all you need to apply for a home loan, guys. That's all you need. We want to make sure that your income is concurrent. So if you're in the process of buying a home, you don't want to just switch jobs unless you are in the same line of work. So don't just, quit being a teacher to go driving DoorDash. That might get your loan disqualified. Okay. And then you want to get your dream team together. Every homeowner needs a dream team. I remember buying my first house. I didn't have a realtor. I didn't have a loan officer. And unfortunately, I was taken advantage of. I was. I ended up buying a house that had a bat infestation, had water damage, and I agreed to it. Had I had a realtor advocating for me, I would have never have purchased that house without having the seller fix that stuff up, right? So I bought a house that was previous to HUD home and had been foreclosed, but I should I had a realtor, and I didn't. You know why? Because I thought I had to pay the realtor. Guys, the seller will pay the realtor. So get your dream team. You need a credit counselor. You need somebody who's going to help assess your financial situation right now and help you identify if you're ready to buy and what you need to do to get mortgage ready. You got to have a real estate agent. This is a person who's going to show you around. They're going to educate you about the home buyer process, where you should live, the size of the home. They're going to make sure that you're identifying properties within your price range. And then you need a loan officer, right? The person that referred you here, they're a loan officer. That's why they're sharing this with you, to educate you. But a loan officer is going to help you also evaluate the credit and finances. And they're going to look at your employment history, and they're going to make a determination if you're mortgage ready. But your loan officer is going to get you the money. Somebody say, show me the money. Your loan officer is going to get you the money so that you can get the house financed. I don't know anybody that's spending $300,000 cash to buy a house. So you're going to need to finance it, but you want to get the best terms possible. And once you have the dream team, guys, you've got to get a pre-approval for a mortgage from your lender. Your a community loan officer that referred you to this home buyer, they are your community lender. And of course, like I said, we're looking for more people to join us, but they're going to determine the maximum amount you're qualified to buy. It's okay if you're not ready right now. Keep in mind that it's a process. Even if you aren't ready yet, let's get you ready and then go in for the loan pre-approval. But having a pre-approval is critical because a realtor is not going to take you shopping without it. The pre-approval says, hey, I got a serious buyer. I can get in my car, spend my time driving all around the city because I got somebody I know that a bank has said they got the money to pay for this house, right? So those are the 5 steps. And lastly, guys, we want to talk about loan option and financing that's available here with Capital Federal Mortgage. Guys, we're super excited to be working for a federal credit union. This credit union is very unique in that, our average home loan is about $190,000. Where if you were to look at, let's say, a Wells Fargo, the average home loan is about $500,000, $500,000. So we have a small town feel here. We understand what you need, and we understand that you need to get to the money. All right. And so here's some things, guys, to be familiar with, just some terminology. ARM, it's okay to get an adjustable rate mortgage if you only plan on being in that house for a short period of time. But if you're looking at long-term, adjustable rate mortgage is something probably you don't want to consider, right? A good loan officer is going to assess what you need and help you most likely get into a fixed rate mortgage, right? Know what your APR are. Appraisal is going to be needed. This is going to determine the value of the property before you buy it, so you're not upside down like many people do with automobiles. You need closing costs. What are those expenses associated with closing costs? What do you have to bring to the table? What is the seller responsible for? That's the seller contribution. Down payment. What percent of the loan are you expected to pay? With some loans, you can come with $0. VA, if you live in a rural area, USDA, guys, you don't have to have any money down, right? But if you're doing an FHA, you probably have to come to the table about 3.5%. So it can vary depending on the loan. Earnest money. This is usually $1,000 to $3,000. It's saying, hey, I am serious about this house. And so it's like you put the house on layaway even before you qualify. So your earnest money is basically like, overcharged application fee if you were renting, right? It's just saying I'm serious about it. But even now, when you start to rent, they're making you put down earnest money to rent an apartment. So you got to have hazardous insurance, mortgage insurance. You're going to have property taxes. Just kind of get familiar with the language of that. But here are the things that you need to consider right now. How much do I qualify for? Getting with the loan officer that referred you to watch this video, they're going to assess where you are and help you get a pre-qualification with our underwriting team. How long do I plan on living here? Is this a short-term house? Am I buying this for long-term? I'll tell you, even though I'm in my 3rd house, guys, I know I'm not going to live here. When we purchased this house, it was the plans to be out of here by the time our daughter was going to middle school. So we have 2 more years in this home. What additional expenses will I have? I already talked about that. HOA, does this community have additional HOA fees, maintenance fees? Is my credit score good enough? You want to have the highest possible score. Even though you can buy a house at a 580 on an FHA loan, guys, you want to have the highest possible score to make sure that you get the best possible interest rate, right? You can always refinance later. That's true, but you want to get the best bang for your buck. Make sure you don't have any delinquent accounts on your profile, and make sure that you have the minimum credit score for that particular loan product. Now, do you have to have down payment? Yeah, on some loans you will, and you want to consider your finances. Sometimes, depending on how much income you have, you may be able to get a down payment assistance program, but nonetheless, you still going to have some money. Okay. Now, when it comes to the mortgage process, there are do's and don'ts, and I'm going somewhere with this because I want you to understand you do have to get a pre-approval. You do need to pay all your bills on time. Keep a copy of all your check stubs. When you're in the home buyer process, listen, you don't want to be here it is coming up to your closing, it's going into the weekend. They need to verify your income, and you can't get into ADP. You can't get in touch with your boss man. So keep a copy of all of your documents inside of that home buyer folder, as I already instructed. Keep proof of all payments. If you made a credit card bill and it hasn't posted on your credit yet, keep proof that you made that payment. Print it out, put it in your folder. Protect your credit. Don't let anybody check your credit for anything. Don't apply for any credit. Don't co-sign with anybody. So now I'm going into the don'ts. Don't make any new purchases. Don't add any new inquiries on your credit. It could throw your loan off the table. Don't make any large deposits or large withdrawals. No large sums of money in and out of your bank account. Anything over $500 will have to be sourced, which means they're going to have to track it down. And the last thing you want is them having any kind of suspicions about where you're getting your money from or how you got your money, right? And so don't miss any payments on anything. Do not start or quit a job, right? So if you are already in the home buyer process, stay where you are. If you are getting ready to retire, buy the house now while you can still demonstrate you got the income. Don't change bank accounts. Don't transfer any large sums of money. Don't co-sign on anything. Don't get a loan for anybody. Don't get a car. Don't get a car. Don't get a car. If you want to be a homeowner, guys, think about how much a car costs. That's $15,000 to $30,000 plus, depending on what you buy. That's going to calculate against your debt to income ratio. Now get the house and then go get the car, because a car loan don't care that you got a mortgage, but a mortgage does care if you got a brand new car loan. And don't get discouraged during the process. It might seem like it's taking a long time. It might seem, things are going unfavorable. It might seem untimely, but don't give up on your dream of home ownership. As I mentioned, we were living in a moldy apartment before we decided it was time to own again. And we looked at, okay, let's get out of here, get into a house. We were building a house from the ground up. We experienced, unfortunately, a terrible MLO, and we had to go back into renting. Well, we were renting a nice house, paying for it. And then I'll tell you, I was like, can we ever get into home ownership again? Will we ever own? And then God opened up the doors for us to be able to buy this house with a 766 credit score. So we got a great interest rate, 2.25%. We'll probably not see interest rates that low again, but the best time to buy is now. Somebody say right now. So let's talk about this amazing credit union, Capital Federal, where the person that shared this information with you are employed. Again, we are looking for more people. So if you're looking to supplement your income, you can partner with us and become a community loan officer. We're going to train you, educate you, and all of that. But what we want you to know is there are different products out there. You can do a conventional loan. This is a very common type. Conventional FHA are the most two common loans out there. But guess what? It's all about your credit score, your debt to income ratio. And with the conventional loan, typically you need about a 620 credit score, and you want to make sure that your debt to income ratio is no more than 50%. About 48% is a good place. And you need to expect to come to the table with at least 3% down, and also you can have the choice of skipping out on PMI, which is your private mortgage insurance, if you come to the table with 20% down. But think about it, that's 20% of the entire loan balance. And so that's a lot of money for most people. So just think about that. Think about FHA. This is probably going to be for more people that are watching this. FHA allows you to buy with as little as a 580. Of course, we highly suggest getting that up, and we can help you. Again, if it's your credit score, let us put you through the AI credit remediation, get your score up, but you'll need 3.5%. And if you got 10% down, but who wants to waste their money like that? right? USDA loan, again, for those that live in rural areas. This is those that have lower income as well, so you have to meet the income requirements, and you'll be able to buy a home out in a rural or suburban area. With this loan, there could be no money down. No money down also for the VA loan. So if you served our country, and you are a surviving spouse of a veteran, then you can also purchase a home with $0 down, very low interest rates typically on a VA loan, but you do have to meet the requirements of having served in the United States Armed Forces or National Guard in order to qualify for the VA. Now we have fixed rate loans, guys. We have adjustable rates. So a fixed rate is, this is the interest rate. It will never change over the duration of the loan, whether you would do a 10, 15, or 30-year loan. This is my interest rate. My interest rate is 2.25%. So we probably will never sell this house. We'll take equity from it and we'll use it as a rental property. But because the interest rate is so low, we're never going to sell. So we're going to hold this house, right? The amount you pay per month could fluctuate, depending on property taxes and insurance rates in your area. But for the most part, if you have a fixed rate mortgage, your mortgage payment is pretty predictable every single month. So consider, now I know what I'm paying for my forever home. And I'll tell you, this is the best idea, especially if you know you're going to be somewhere long term. We're starting to see the ARM surface. This is actually what crashed the market, because so many people had an adjustable rate mortgage going into 2008. And when the market crashed, they were left now, going from a 5% to a 15, 18% interest rate. So many people lost their houses. Adjustable rate mortgages are 30-year loans, guys. But if you know you plan on being in a place maybe 5 years, yeah, it might make sense that you do a 5-1 adjustable rate mortgage, right? But you know that for the first 5 years of that mortgage, it's a set interest rate, and it's typically a lower interest rate. But God forbid you go into year 6, that interest rate is going to go up. So you want to make sure you're talking with your lender, whoever shared this with you, so we can get you the best mortgage product possible. Jumbo loans, these are for, the mansions. These are the gated communities. Typically a jumbo loan is going to be anything over 726,000. Okay. You do have to have great credit, 700 credit score or over. And you also have to come with a large deposit, at minimum about 10 to 20%. And surprisingly, there are people who buy jumbo loans every day, all day, and they have the money. So if that's you, just know we can help serve you. But a lot of times people say, well, I don't have all the money I need. Is there any down payment assistance? I will tell you, we do have down payment assistance programs here at Capital Federal, but most down payment assistance programs are found at a local level. They tend to be, state or countywide programs, and you can work with an experienced realtor to help you get paired up. Your loan officer here can also help you, but typically, in order to qualify for down payment, you need to be a first-time buyer, have low to moderate income. That means, you got an average income, and this house is going to be primary residence. Even though you can have up to 4 doors, you still need to live in one of those doors. So you have to have it in a qualifying area, and you also have to work with a qualifying lender. So if you are looking at a DPA program and it's not available here, of course you got the ability to go work with somebody else. But just know, when you're working with our program, you have people who are truly committed to educate you, to empower you, and hold your hand throughout the entire home buyer process. And that's why I love Capital Federal, because we do have, DPA programs. We have a variety of them, because we know that navigating through the home buyer process can be frustrating. So we will make sure that you have all of your options and you know what you're getting into. And so I'll tell you right now, as we wrap up, we're excited that you were interested in learning how to purchase your own home, how to move into a new home, how to own easy. We're excited about that. And we want to say congratulations to you. But also just know, we are looking to partner with more virtual community loan officers, people who want to help families get into homes, offer these a variety of home-based products, that will allow people to live their best life, to give something behind for their children. We do 203K or rehab loans. We even have a loan buddy that's assigned to help you navigate the loan. So if you've never been in the financial services, that doesn't mean you can't be a loan officer. In fact, right now, an article just recently came out on CNBC, Indeed, Fox. It's all over the internet that one of 2024's best jobs, which pays over $200,000 a year, is becoming a mortgage loan officer, and there's no degree. So we are looking for more people with compassion and heart, guys. If you're watching this, we want to welcome you to partner with us. It's a small investment to get your national mortgage licensing number and get trained through our program. But of course, it's thousands and thousands of dollars if you do it the traditional way. But we have it available for $249 if you're interested in partnering, and you can come on board. You can get your credit services free. You can help other families, and you can know that you're making a difference, but you also can make some extra income. If you need to qualify for a mortgage and you don't have income, guess what? You can come out here and partner with us. So we do want to, just point out some resources. One of my favorite budgeting tools is a budgeting workbook, www.womenofwealth.net. It allows you to just simply work through, write in, and pace yourself. Anything financial literacy, you can check online. Nerd Wallet is one of my favorite. Dave Ramsey. You can find out about all of the financing resources available through our bank, capitalmort.com. And then, of course, if you're looking to improve your credit, you can get back with whoever referred you here. You can find some basic information at debtcleanse.com. But if you need help with your credit, you want to make sure you get back to the person that referred you. They will get you set up and get you started. And that way they get credit for it. Okay. And then also remember, you can always pull your credit report for free, annualcreditreport.com. And if you're interested in reporting your rent, we have a third-party partner. But again, the person that referred you to watch this home buyer workshop can assist you with that information. So that is our time, guys. Again, we want to say thank you to every single one of you that thought it not robbery to participate tonight. And then if you have any questions at all, we certainly want to answer those. Get back with the person that shared this virtual home buyer workshop with you, and let them know, hey, I got a question about this. Hey, I need to do this. Hey, I was thinking about doing this, and let them help guide you. Okay. So again, guys, my name is Dr. Michelle W. Kofer, the pivoter, helping families pivot into homeownership. It's been my pleasure to serve you today. Get back with the person that shared this video with you, and let them know you are ready to own easy. That's our time. Take care, guys. Bye-bye.